Hi guys, in this video we are going to discuss about the financial model. So this is the leverage buyout financial model of American Eagle Outfitter Inc. So this is the income statement. Let's start with this. So we'll start analyzing the financial model and then we go on to the next steps. So here we go by first. So first the all the data in the $1,000,000. Expect the share information, per share information, like if any given, like actual or estimated. So this is the actual number, like 2010 to 2014, and after that these are the expected number, or these are the estimated number, 215 onwards. The blue numbers are for the actual data, like these are the actual number, and the green are the linkage, and black for the calculation, and black are the calculations, like calculated number basis of the uh, another scenarios, and the green one are the linkages, like if we link with the another sheet, so these are the linkages. So first we start with the anything with the revenue. So what is revenue? The sale. So this is the actual number of the sale: 2940, 2945, 3120, 346, 3306. So this is the sales number. This is the actual revenue for sales. Then we go into the cost of sales. So what is the cost of sales? So here this is the sale. Then there's a something like let's say we have the 10 rupees, and our sale is 20 rupees. We are selling the tomatoes. So the revenue from the tomato is 20 rupees, and the purchasing cost of the tomato, or the manufacturing cost, or the growing cost of the tomato is 15 rupees. So this is the cost of the sale, or the cost of production, you can say that. So these are the cost of productions, and these are the linkages, like these are linked with the another sheet, like this sheet. To go into this sheet, we will press control, then big bracket, and we will come to this sheet. This is the shortcut. And if you want to return to the dead sheet only, so we'll just press the F5 and OK. So we'll go to the, then we will back to the same sheet. Now this is the cost of sales. Then this is the gross profit. Like, what is the formula for the gross profit? So as we suggest, like income minus, or the total revenue minus cost of sales. So this cost of sales into the negative, like this is into a negative. Why this is into a negative? Like, this is the same formula, we can put this on the basis of two formulas. Like, let's say if we put the 2950 minus 1767, so this is the same number. If we put this negative and we plus them, so this is the same number. So that's why we put this as a negative. So this is the gross profit. So here is the gross profit. Then we go into the indirect expenses, like we have the gross profit for something, and then we go into the indirect expenses, like what are the indirect expenses apart from that, apart from the sales or the another cost. So what are the indirect expenses? Now just come to the indirect expenses that below the gross profit. So first one, the selling general administration expense. So these are the expenses, again these are the negative, to simplify the formula. Then we have the loss on the impairment assets. We can say that these are the all indirect expenses that come into the P&L. Then we have the EBITDA, like earning before interest, taxes, depreciation and amortization. Like, this is before the depreciation, taxes and interest. Then we come into depreciation, like this will come from the depreciation schedule. Again we check that from the control bracket. So this is the depreciation schedule. Then we come into the amortization. This is the amortization. This is the depreciation and amortization. Then we come into the EBITDA. So this is the interest expenses, and this is the EBITDA expenses. Then we come into the other incomes. So these are the other incomes. Then there's a realized loss of the sales of investment, or the sale of investment properties. Then we come into the loss relies on the earnings. So this is the earnings. These are the profit before the expectations, items and taxes. So these are the profit. Then we have the provision for the income taxes. So this is the provision for income tax. This is the tax rate. This is a general tax rate depend on the country to country and the situations. This is the income from the continuing operations. Like this is the provision before the exception items. Provision for income tax. This is the continuing operations income, and this is the net income. You can say that. And these are the basically calculations for the EPS and other things. So this is the income statement schedule for that. So we'll discuss about the another schedule in the next video. Stay tuned and subscribe the channel for the more investment banking videos. Let's meet in the next video.